The broadcast is now starting. All attendees are in listen-only mode.
Hello and good afternoon, everyone. My name is Todd Rich. I am the head of education here at Nadex, and welcome to Nadex. We're going to be doing a getting started session today. It is basics, but what we're going to be covering are trading binary and knockout options, and I will define what those are and I'll show them to you and make it hopefully easy for you to understand what those are. And uh, almost more importantly is how do you go about actually doing it? So we'll be going through our trading platform, the new one that we've got. It's kind of cool. And I'll show you how you can understand both of these products looking at our platform, and then how you could potentially trade knockouts and binaries. And for fun today, I am going to probably focus almost entirely on oil, just because it's been such a hot topic in the markets. So anyhow, before we get into all the fun, I do need to take care of some housekeeping items. The first of which is our disclaimer. This webinar, as are all of our webinars, are brought to you by our compliance department. And it is important that you do notice this. I don't want to make light of it. So I'm going to leave this disclaimer up for a few seconds. But trading does involve risk, and it may not be appropriate for everyone. And that the money that you use to trade should be capital that you can put at risk. All trading decisions are done at your own risk and are solely your responsibility. And this is actually really important. I am going to be going through some real examples today. That's the best way to show how the platform works and for you to see the markets. I don't want you to take anything I say today as a buy or sell recommendation. I am doing this strictly for your education. So that's important. The way that we're going to go about doing this today is I am going to discuss binaries and knockouts. I'm going to show them to you on the platform so that you understand how these products work and how you can understand that when you look at our new trading platform. And then I'm going to show you some cool features that we have, particularly around charting, the way that a lot of people do look at both binaries and knockouts is around technical analysis, and they'll do a lot of price action charting. And here at Nadex, we've given you some tools to help you along on that journey, and I'd like to show them to you so you can see how to use them. Before I jump over to the platform, and I'll come back to this again at the end, but I just want you to know that we're here to help. All right, if you have any questions after this session, if there's something that I didn't quite get to and that you'd like a little bit more color commentary or clarity on, please give us a call. Our phone number, our email address, customer service at nadex.com. We are here to help you. So one of the best ways for us to be able to help you is if you reach out to us when you're stuck or you're not sure about something. Now, I'm going to tell you, this is an interactive session. So I want to encourage you, there's a questions box on the GoToWebinar platform. And if you've got any questions, I've got my colleague Nelson in the background, and he is here to answer any of your questions as we go. So if something should pop up, please type it in. Nelson will get back to you. So if I go through something too quickly or it didn't quite make sense to you and you would like additional clarity or you have a follow-up question, please ask Nelson. Type it into the questions. And in fact, if you're paying attention, just say, "Hey, Nelson," in the questions. I just want to make sure that you guys understood how to use the questions box. And I'm sure he'd love to hear from you. Okay, let's get into the meat of what we really want to discuss today, which is binaries, knockouts, and the Nadex platform. So, and I'm actually going to show you some other resources that are available to you that you might find handy. on the on Nadex. The first of which, this is important when you're on the Nadex page, up on the webinar section. We have stood up and are doing quite a bit of content for prospects and customers. We want to help you on your journey. If you click on that section, you'll see all of our upcoming webinars, and we've got some booked out for the next couple of weeks. I usually don't put more than a couple of weeks up there. But more importantly, this session, as are all of our sessions, we record them and make them available to you on demand. So you can binge watch educational content if you'd like. If you want to get into a full-blown hour-long session on the basics of binaries, we've got it. If you'd like to know more about, say, knockouts, and my colleague Dan Cook did one just a couple weeks ago on that, but we've always got plenty of content that's upcoming and on demand. And I do, if you'll notice, we do a market update every Tuesday with a an education partner of ours, Brian Caprice, and he goes through the FX markets, the commodity markets, the index markets, and he takes a look at our knockouts and our binaries and even our call spreads markets and does some analysis. So if you're ever curious about what's going on in the market, he points out news events that might be coming out or things that later in the week that you might want to be paying attention to that might present opportunities in the market. So every Tuesday we've got that, and then every Wednesday I do one of these welcome sessions for all of our new folks. With the volatility that we've had in the markets, we've had a lot of new people in our markets. So I did want to point that out. I thought it was rather important. Please take a look at the resources that are available to you. And I am going to put a little teaser out there. Is in a few weeks, we are going to be doing a virtual education summit. It will be a 2-day summit. It will be online. It'll be roughly 4 hours each day. Day one will be basic. Day two will be a little bit more advanced. And again, we'll record all that as well, but I wanted to put a teaser out there that is coming. And if you could, in the question section, if there are some topics that you would love to hear in that virtual education summit around Nadex or the Nadex markets, type them in. We would love to have those suggestions. We take all feedback. Again, we're here to help you. We want to make sure we're providing the right content and education to help you on your journey. Now, let's get into looking at the Nadex platform and trading binaries and knockouts. I am going to go up to the right-hand corner and click Login, and I am going to click on, it says Join the Beta. This is our new and improved platform. I like it. It doesn't quite have 100% of the functionality, namely some reporting. If you wanted to get some reports on some trades you had done earlier. There's a little bit of functionality that we would like to add to it before we make it our primary, but it is forthcoming. I'm going to click on Join the Beta because I really like this. It's a very clean experience, and it makes understanding our markets, accessing our markets, and trading our markets that much easier. If you've never been to the new platform before, again, we call it our beta, but I am in, and I do want to point this out, I'm in a demo environment. It says demo in the upper right-hand corner. Now, the reason I mention that, I would encourage it. If you have never traded in our markets before, or you're brand new, please open a demo account and play with it a little bit. We find our customers are a lot more successful if they've played around in the demo environment before they went live, and we want you to be as successful as you can. Again, I mean, we want you to have a good experience. So this demo platform is really nice for you to learn how to navigate around, how to understand some of these markets, how to understand some of these products, maybe even to learn a little bit and practice some of your charting before you get into the real thing. Now, the other thing I do want to mention is it is a demo environment. And while we do get some live data in here, the trading experience will not be identical to the live markets. And in fact, sometimes the data in here is a little off from the live markets because we've got people all playing around in a practice environment, and that can skew things on occasion. So it's just important to note that this is a demo environment. So the data is demo data, but it should mirror mostly the live markets. Now, if this is your first time, there are a few things I like to point out. When you first open up the platform, there on the left-hand side, you'll see all of our markets, and you'll see them separated by products, binary options, and we're going to get into that, call spreads, and I'll touch on that a bit. And we currently call them touch brackets. Now, we're going to be changing the name to knockouts because that's what everyone knows them as. I'm going to call them knockouts throughout this session. It currently says touch brackets on our platform. That will change. But when I say knockouts, knockouts and touch brackets are the same thing. It's just a different name. That's the only difference. And you'll understand why I think knockouts makes a lot more sense when I describe these products. Um, if you haven't heard of knockouts or touch brackets before. So, oh, and you'll notice at the bottom, it's your positions and orders and order history. And you'll see that get populated as I do some examples. And then you've got your workspace, and my workspace is currently empty. Let's start with binaries. And again, I told you I'm going to focus on oil today as my examples because the oil market's been crazy as of late. And in fact, it's even been rather active today. If you caught it in the news, a crazy thing happened in the oil markets where the price of oil actually went below zero for a brief period of time. If that doesn't make any sense to you, it's because the way the markets work, there was no storage capacity. The benchmark index in the United States is WTI, West Texas Intermediate Crude Oil, and they price it around distribution around Cushing, Oklahoma, and there's massive storage facilities for storing this oil. But because the economy has gone a little slower and people aren't driving and we aren't consuming as much oil, oil was getting produced, being brought into the system, and had no place to go. They physically couldn't put it anywhere because no one was taking it out the back end, and it costs money to store oil. You've got to put it in a facility. You've got to have these facilities built. They're not cheap. You got to insure uh, in case something were to happen to one of those facilities, and there was no place to put it. So for a brief period of time, people were paying people just take this oil because we've got stuff coming in and we got to get some of it out. Kind of craziness. Anyhow, interesting little anecdote on the oil markets. Now, in the binary options, I do want to point out we do have some very, very short term. These are pretty popular. 5-minute binaries, those are all in currencies. All right, we do have 20-minute binaries. Those are on indexes. So you can say, hey, what's going on? The US Tech 100 is the NASDAQ index. The US 500 is the S&P 500. The Wall Street 30 is the Dow Jones index. And the US Small Cap 2000, that's the Russell 2000. If you're not familiar with those indexes, we could cover that in another session. But we do have these 20-minute binaries. And then we've got binaries by market class across the indices, across foreign exchange. We even had events contracts. In fact, there was an event this morning. It was GDP, and there was a binary around the GDP contract, which is now settled. I am going to go into commodities, and I'm actually going to look at crude oil. That's really what I want to focus on. And I think, and again, this will be the same across all of our binary products, but if you're not familiar with what they are, let's show you. I am going to go to the weekly. The reason I'm doing the weekly because it's a little easier to demonstrate, and I'm going to show you what these are, and then I'm going to go to a 5-minute foreign exchange contract, and you'll see why I'm using a weekly contract in oil as an example, because the short-term contracts are quite volatile. A lot of price action. So when I click on weekly, here in crude oil, you'll notice that we have a variety of strikes of different levels. And what a binary contract is, it's a simple yes or no. Is oil at the end of the week going to be above or below one of these levels? I'm going to pick, and we can see right now oil's at 1591, and I mean, it rallied from negative, and earlier today it was in the 12 range, so it's certainly rallied some. Do I think it's going to keep going? And I'm going to look at the 1625. All right, is it going to keep going by the end of the week? So let's click on that. When I click on that, and now I'm actually going to hide this section, it will bring up a chart. And here is a chart of the price of oil. It's a candlestick chart. If you're not familiar with candlestick charts, we do sessions on candlesticks, on what these mean. But you see a chart, and we can see that oil is currently, and here's the indicative price over here, around 1591. And my prediction, my question for this binary contract is, will crude oil be higher than 1625 at the end of 2 days, at the end of the week? Right? And there's a price. Now, these contracts are all worth $100. And the price that you see essentially is the probability, or the market's pricing the probability, that the event that we're talking about will be true. So right now, at this moment in time, the market is saying there, if I got to pick a midpoint, and notice these markets are a little wide, and the reason they're a little wide right now is, to be fair, this is a chart of today, okay? And this is crazy. Earlier today, oil was, down here at 14. In fact, if I zoom out a little bit, let's just zoom out. I mean, oil was actually in the $12, $13 range earlier today, and it traded up to 16, above 16 and a half. I mean, that is, as a percentage move, that's pretty dramatic. So the markets have widened out a little bit because of the volatility. I mean, we're watching this move around pretty quickly. So, but if we pick the midpoint here, it's right in between. Let's go ahead and put a price. Let's say I think oil were going higher, and I'm going to put a price in. Oh, let's click buy, and then let's click 40. I'm just going to make it easy. Right in between, a simple, clean number. The market is basically saying there's a 40% probability that at the end of tomorrow, oil will settle above 1625. That's the prediction. Now, it's not saying it will trade above there. It's saying, will it settle above there? Meaning it could go up above there and then come back down. Who knows? We still have 2 days and oil's been moving all over the place. So this is what the market is currently predicting, is a 40% probability. If I were to buy one of those, that's what I would actually pay. I would pay 40. And notice at the bottom of the order ticket, because we know that each contract is worth 100, if I were to pay 40, I'm risking 40 to potentially make 60. If it does settle above 1625 and my prediction were true, I'd risk 40, it could go to 100, I could potentially make 60. And notice that when we did click on this, where oil would need to settle is shaded blue on the chart. Let's go ahead. I'm going to actually send this order in. And this is, again, it's a demo environment, not a buy, sell, or hold recommendation. I'm going to place the order. And the reason I wanted to do that, notice I got a notification that my order went into the market. And in fact, here at the bottom, you see that my order is now in the order section. Now, in the real world, maybe someone would want to sell that to me. I don't know. In a demo world, someone would actually have to be looking in the demo to see if they actually wanted to do that. But what I've done, and the reason I did that, is you don't always have to buy the offer or sell the bid. You can use limit orders to put a bid below the market or an offer above the market, or place an order in between. Now, with this order, I'm willing to risk 40, and I'm saying there's a 40% probability that oil will finish higher than 1625 at the end of tomorrow. And there it is. I'm risking 40 to make 60. Now, for fun, let's go ahead and just buy one of these. And I'm going to just click the order and I'm going to buy one at 46.25. Why not? Notice that I'm still working my order below. There's my 40 bid, you see it. But I now have a position. All right, I paid 46.25, and if you were curious, because I paid 46.25 for a one lot, I did risk 46.25, and because it could go to 100, if oil settles above 16 and a quarter tomorrow or at the end of the week, I would the contract would settle at 100, and I would make 53.75. Now, what's important to note is, do I have to wait until the end of the week to see what happens? And the answer is no. All right, so I actually bought one of these. If I wanted, and I see just a little earlier today, oil traded up to 1670. All right, and I just paid, um, I just, you know, paid 46 here at the 16 and a quarter level. If it went up to 1670, the probability would be above, since at that point, I mean, right now oil's trading below 1625, right? It's trading at 1590. If it went up to 1670, that would be above 1625. I would expect my probabilities to be above 50. I mean, there's probably at that point it'd be higher than a 50-50 probability because it's already above that price. So if I thought that maybe if it went up there again and this went to 56 and a quarter, all right, and I just wanted to make a quick $10, I could put an order above the market. In fact, and the way I would do that, I would just simply click sell, and I'm going to change my price to 56.25. And here, I'm just trying to get out of the one that I'm long, and I want to put an order above the market. I mean, the best offer right now is 46.75, but I think it might go up to 56.25 today. I'd place that order, and again, I get an alert on the system, and notice now I still have my position. I bought one for 46 and a quarter, right? And I've got two orders in the market, right? If it were to come down, I'd buy another one at 40. I'm fine with that. Maybe I'll have two. And then if the one that I own already, I'd be willing to sell it out at a profit, and just take my profits, if it were to get up there. The point being is, just because there's an expiration associated with the contract does not mean I have to wait till expiration to see what happens. So hopefully that was clear, that on these binaries, they will settle either at 0 or 100. Notice when I clicked sell, by the way, where if I actually did sell it, oil would have to settle, it would have to settle in the red zone, shaded in red, at expiration for this to be a profitable trade. If it settles, if I were to actually sell it and it were settled in the red, the contract would go to 100. Now, it doesn't matter how far in the red it would go. If it went down to, because the level 1625, if it settles at 1625, it's below. All right. In order for it to finish above, it has to be higher. Notice that will oil finish higher than 1625? So 1625 itself is actually a below order. If it settles at 1624, it goes to 100. If it went down to 12 again, this contract would only go to $100. So when you get into a binary option, it is a yes or no, all or nothing. If yes, it goes to 100. If no, it goes to 0. If I sold it, I know what I can make. That's the price I sold it for. If I buy it, I know the most I can lose. That's the price I paid for it. But I also know how much I can make. It's the price. If I buy it, it's the 100 minus the price. And the most I can lose if I sell is 100 minus the price I sold. But you don't even have to know that. On every order ticket, we give you your maximum profit or your maximum loss on the trade before you get into it. If you've got any questions on that, please type them into Nelson. He is here to help. If anything there wasn't clear, type it in. And I'm also going to remind you, if you want to Give me some additional topics to cover in our educational summit. Type those in as well. So hopefully this was pretty clear on binaries. It's a yes or no. Do I think it's going to go up, or do I think it's going to go down from that level? Notice that we have different price levels. All right, and there's different probabilities for these things happening. And I will tell you, remember, this is a demo environment, so sometimes the data gets a little uh, strange. And in fact, I can probably jump over to a live environment, and at some point you'll see that the prices are different. So important to know that. All right, so that's binaries. Yes or no? Do I think it's going to be above 1625 in 2 days? If yes, I buy. I'm buying essentially a probability that this is going to be true. That's the market pricing it. And it's shaded in blue where it would have to settle for it to be profitable and go to 100. If I think it were going down and I think this were not true, I think, no, this is not going to happen, I could simply sell it. If I think oil is going lower, here's an opportunity, I could sell it, okay? And I could, if, you know, that's my bid, but I could sell it and I could potentially, I would collect $40, that's the most I can make. And because if it settles below, this contract goes to zero. So 0 is in the red, 100 is in the blue, and you're picking yes or no. What do I think is going to happen? And you can wait until expiration, and here this expires in 2 days. Or if the trade is going against you and you'd like to cut your losses, you can get out. If the trade's going in your favor and you'd like to lock in profits, you can get out. Right? You can always trade around these. Okay, so that is binaries. Hopefully that made sense. Again, if you've got any questions, type them into Nelson. Okay, next, and this is going to be a little bit more fun, I think. I happen to really like these, are touch brackets or knockouts. Okay, they are knockouts, and I'm going to explain a knockout. And again, I'm going to do this in oil as well. So let's go to crude. And I'm going to, and you'll see that we've got 4 contracts listed here. Notice that the price on all these is the same, and I am actually going to just click one of them to populate the chart. And then I'm going to get rid of it because, in fact, we put all of them on the chart at the same time to make it easy for you. Okay? These are knockouts. Okay? And what does a knockout mean? Now, if I thought oil were going to be going lower, I can buy or sell a price level. So instead of a probability, which is what you see on binaries, and binaries are an all or nothing, yes or no. If yes, it goes to 100. If no, it goes to 0. If you buy it and it comes true, it goes to 100. If you buy it and it's not true, it goes to 0 and you lose. The reverse if you sell, you can always take a short position. In knockouts, you're actually trading the price. All right, you're taking a position on the price of oil. So it might be a little bit easier for you to track and understand. Notice we have an indicative price right here on the order ticket that says 15.95. This is the price of oil ticking. All right. It's also here on the chart. I mean, it moves so quickly because it's jumping around. But it gives you an idea of what the price of oil is. Now, the prices that you trade are around that. Notice how close it is, right around. This is 15.95 is the indicative price. The sell is 93, and the bid is 90. Here, it ticked up. The bid is 95 and the offer is 96. I mean, these markets move so quickly. Again, this is a 2-day, as a weekly contract that settles in 2 days. Now, let's say I think oil's going lower. Let's go ahead and do that. I'm going to sell one. I'm just going to sell one right here at 15.95, place my order. Ooh, I'm actually going to get a better fill. Noticed that went straight in, and right when I traded it, how crazy was that? I sold the 1450, 1950, and I'll explain what that is in a second. I sold it at, oh, and look at that. The prices just went gummy on our demo platform. Oh, that's frustrating. This is the challenges of trading in a demo environment. You know what? I'm going to talk about this, and then excuse me. I'm going to talk about this because I did the 1450. Is that what I did? The 1450, 1950, and I sold it. You know what? I think it's going to be easier if I go over. Give me 1 second, because and this is just unfortunate in a demo environment. I'm going to log out, and let's take a look at the live environment. Okay, we're going to go over to now. I'm not going to be able to do any trades here, unfortunately. But notice now I am in the live platform. I'm going to go over here. I'm going to go right back to where I was, and we're going to go back to crude oil. Here it is, right? I mean, all of a sudden the prices all make sense. It's 1591, and let's just click on any one of these again, and let's hide this because I didn't get a chance to show you what these touch brackets actually mean. Okay, so here's the. Let's just pick. All right, I'm sorry. All right, here this. Oops, sorry. There we go. Okay, I think oil's going lower. Okay, I think oil's going lower, and I notice how we draw on the chart. We've actually got the indicative price of oil. All right, this is a live environment, 15,908. All right, and you see it up here on the order ticket as well. The prices, 1590, so it's right 1590. The bid ask is right around there. If I sold one of these, I think oil's going down. All right, so I placed my order and I sold. My prediction is that oil is going to go lower. That's what I'm looking for. Now, in this particular touch bracket, I've got boundaries. I am trading the 1250, 1750. It is, and it tells me that right here in my order ticket. If I sold one of these, all right, and let's put in a limit order because I want it to calculate right. Let's make it 1590. If I sold one here, 1590, that's the level that I sell. If I because these are $5 wide, each one of our knockouts for oil is worth $500. So it's a little bit bigger than a binary contract. The total contract is worth 500. Now, if I sold this and oil were to go up, so I was wrong, and it touches 1750, the upper end of my range, all right, I would get knocked out. All right, it's essentially a stop loss. If oil rallies to 1750, my prediction that oil was going to go lower, I wanted it to go lower, but it spiked up. It will stop my losses, and the most I can lose if it touched 1750 is $160. I know my losses are limited. Now, if I'm right and oil keeps going low and it goes lower, I would make money all the way down, back down to 12 and a half. And notice, I mean, this is crazy. I mean, oil was in the 10 range yesterday, right? I mean, and it's rallied from in the 10 range all the way up to 16. If I sold it and it went down to 12 and a half and just touches 12 and a half, I'm knocked out of my trade and I take my maximum profit. There is no slippage. A knockout contract ends when one of the boundaries is touched. And if I'm going short and it touches the upper end, I'm knocked out. I recognize my losses, but I can't lose any more if oil went all the way up to 22. If it went down and touches 12 and a half, I would be knocked out. That's why we call them knockouts. And I would recognize my maximum profit. Now, if it went back all the way back down to 10, I wouldn't make any more. All right, but I've defined my risk reward before I went into the trade. Now, the question then begets itself: what happens if oil finishes in between these boundaries and it never touches one of the boundaries, in that case, my profit or loss would be the difference between the price that I sold it and the price that it settles at the end of the week. So if I sold it at 15.90, all right, this is my order 15.90, and it it jumps between these two boundaries, and somehow at the end of Friday it settles at 15.90, my contract goes away. I didn't make anything, I didn't lose anything. If it settles above 15.90, I'll lose some. I know that I can't lose any more than, because if it went up to 17 and a half, I'd be knocked out. And if it went down and settles below 15.90, maybe 14, maybe 13 and a half, I would make some profit. I would recognize some profit. My maximum profit would only be reached if it went all the way down to 12 and a half. Now, what's nice on our charts is that we give you there's 4 knockouts that are available at any one time, and we give you those knockout ranges so you can actually review. You can look at your chart and say based on what I want to do, which chart makes the most sense for me. If maybe I think it's going to go higher from here and I want to have a very short loss potential, I could use this one, and I'm going to click buy. All right, this is the 15 and a half, 20 and a half. Now we're right here at 15.94. If I were to buy one of these at, I don't want to use market, I want to use limit. Okay, so let's just use 15.95. I like using nice round numbers. If I were to buy one at 15.95, if it went down to 15 and a half, that's only 45 ticks lower, I would be knocked out. I can't lose any more than $45. But here I'm just thinking, listen, I want to go long oil. I think it's going to keep going up. I see it's in this trajectory. I don't want to risk much. So it could come down to 15, but if it touches 15 and a half, I'm knocked out. And if it touches 15 and a half and I get knocked out and then it goes back higher, it's too late. I've been knocked out. Now, if it doesn't touch 15 and a half and it does go higher, my maximum profit would be if it made it all the way up to 20 and a half. So because we give you different ranges, you can decide, if you want to go long or if you want to go short. And if you want to minimize your exposure to the downside, or you want to trade it with something in a range to give you a little bit, right here it's in the middle of the range. We're right here, the 13 and a half, 18 and a half. I mean, we're sort of in the middle. I might decide, and if you'll notice, I don't want to do market, I want to do limit. I'm gonna have to change that setting. Let's just go 1590, all right, or 1595 was, that's the price. It's right in the middle here. Notice that this equals 500. I can say, hey, if I wanted to go long, I think it's going to go higher. I can, but if it goes below 13 and a half, get me out. I would be risking 245 to potentially make 255 if it were to go higher. And again, if it went up above this 1595 level and didn't quite make it to 18 and a half, this is my profit range. My profit range would be above the price that I paid all the way up until if I got knocked out. And if I don't get knocked out and it settles up here, that would be my profit range. My loss range would be, if I bought it, it would be down below. And if oil were to settle lower or touch 13 and a half, I'd be knocked out for my loss. Now, again, this is a way for you to trade the price of oil, because in as much as these knockouts track the actual price of oil. And I know a lot of other retail places right now, if you want to trade oil futures, there's some limitations because of the volatility of oil. A lot of places are limiting what people can and can't do in the oil space. Here at Nadex, because they're smaller contracts and because they're defined risk reward and they're fully collateralized, they're always available. You can buy or sell. Do I think oil is going up, or do I think oil is going down? And with knockouts, I can trade the price level of oil, and with a defined risk, defined reward. And if it touches one of the boundaries, you are knocked out of the trade, either limiting your losses in the event that you're wrong, or locking in profits if you're right. And you can always choose to try to trade out of it before expiration. Just like binaries, knockouts, you can, with knockouts, you can um, trade out of the position if you want to before expiration. Just because there's an expiration associated with the knockout does not mean you have to wait until expiration to see what happens. Now, the last thing I want to show you is we do have some really cool functionality in the charts that is kind of nice to help you in your journey. In the upper left-hand corner, you'll notice you can customize your charts, the range, the time of each candlestick. What I'd really like to show you is we've got some indicators. If you'd like to populate your chart with some technical indicators, uh, there are a variety to choose from. If you're not sure what any of these indicators are, look at the I, the information button, and it'll actually tell you. So for instance, a lot of people like to look at Bollinger Bands to look for levels where there could be potentially support or resistance based on movements around the underlying. If I were to click on that, it will populate the chart with Bollinger Bands. Let's zoom in so you can actually see those a little bit better. And maybe let's actually give it a little bit. There we go. And it can help you decide if there's levels where you might want to potentially uh, look for support or resistance, or where you might want to uh, buy because you think it's going to break out, or sell because you think it's going to be some resistance. But we do have plenty of indicators available to you. If you like, you can also add your own drawings. So if you wanted to put your own support and resistance levels in, you can. Right, and you can draw, here's a line, and I could say, you know what, I think there might be some support if it were to come down to this level. I might want to look at the 1540 level, and you can put your own drawings on here. There are some other drawings that are built in. For instance, if you were a believer in the Fibonacci, um, oh, I didn't want to do that. I want to do Fibonacci retracement. A pattern that is often seen in nature. People like to look at it in the financial markets as well. And I'm going to fit my Fibonacci retracement levels to the chart, and you'll see those in the dotted lines. And there you have it. You could say, all right, well, based upon where we are, where might I see some support and resistance? Maybe I'm seeing some resistance right here at the 15, the 16 level. Maybe, based on this, you might want to take a short position in oil. Maybe you think it's maxed out. Again, I'm not making any trading recommendations. I just wanted you to know that we do have tools available to you. Oops, I clicked on that again. Either in indicators and drawings. With that, I do want to thank you for joining us today. Hopefully you got a lot out of this in terms of understanding binaries and knockouts. I hope you were typing in questions for Nelson. I hope you even typed into the question box some ideas that you'd like to see in our virtual education summit that will be coming up. And again, I want to encourage you, if you've got more questions or you would like to, oh, you know what? Let's put it this way. And you'd like to reach out to our customer service desk, we are here to help. Please let us help you. Call us, email us. We would like to help you along with your journey. Again, I want to thank you for joining us today. Please check out our other upcoming webinars. And with that, I'd like to wish you good luck in the markets, everyone.